In the All In podcast, Jason, Chamath, Sachs, and Friedberg discussed topics ranging from lab-grown meat to Google's recent earnings call. They mentioned that Google's stock was up 5% after beating both top and bottom line estimates, which included a $70 billion stock buyback plan. However, they noted that there was no strategic plan presented for dealing with the two major issues the company is facing: the operating cost model and the AI strategy. Some people think that Google already has an AI strategy in place but hasn't revealed it yet due to regulatory concerns and fear of making mistakes. There was a lack of communication around cost-cutting measures, which resulted in some shareholders losing faith in Google and considering investing in other big tech companies such as Microsoft and Apple. The host mentioned that Google has an edge with their AI advantage over Microsoft, and that Microsoft is heavily dependent on OpenAI, a small startup company. The host bring up two recent topics: the recent charges being dropped for the man who hosed down a San Francisco drug user, and the state of alternative proteins. The hosts expressed their disagreement with the decision to drop the charges, stating that it is part of an overall pattern of chaos and lawlessness in the city, likening it to Gotham City from Batman. The hosts also discussed the different categories of alternative proteins and how they are processed. They mentioned the Beyond Burger, made with pea protein, and how it became a hot commodity for a minute due to its eco-conscious decision. The hosts expressed their skepticism over whether alternative proteins made from plant protein that mimic the texture and flavor of animal protein will move the needle in terms of replacing animal proteins traditionally, and how it is better for the environment. They also raised concerns about the use of processed and fatty ingredients in these alternative proteins and how they may not be healthy for the human body. Ultimately, consumers may be hesitant to choose expensive alternative proteins that do not taste as good as traditional animal proteins. They then discussed the challenges of producing animal proteins using recombinant DNA. While many people would prefer an option that is cheaper, healthier, and tastes better, producing this type of protein is currently too expensive. However, using recombinant DNA to synthesize animal proteins is a promising solution that can make protein more efficient and cheaper to produce. By using recombinant DNA to edit the genomes of microbes, companies can make them more productive at making proteins. This process creates chemically identical proteins as traditional animal products, which are cheaper and more efficient to produce. The key metric to measure its effectiveness is productivity, grams per liter per day. However, the process of producing animal proteins using recombinant DNA is more complex and challenging due to three failure points. 1, strain engineering. 2, process engineering. And 3, scale manufacturing. They continue to discuss the challenges of producing cellular meat, which involves producing cells that replicate and stick together to create meat that looks, feels, and tastes like traditional animal-based meat. The current production of cellular meat involves using fetal bovine serum to replicate cow cells in a tank, which is expensive and not sustainable for large-scale production. The technical challenges of producing cellular meat include editing cells to replicate and grow in suspension, as well as changing the feedstock to create the necessary proteins, signaling factors, and hormones. They also note that the cost of producing cellular meat is currently high, and that companies are competing for a limited supply of laboratory space necessary for production. On a larger scale, animal agriculture emissions are one of the largest contributors to global warming, making the sustainability of this industry a pressing issue. They debate feasibility and challenges of creating artificial meat in a lab. The process involves growing cells triggered by certain conditions in a tank, which could potentially create proteins that are identical to those found in animal meat. However, there are concerns about the taste of lab-grown meat compared to the taste of meat from animals that have been raised and fed differently. For example, the panelists mentioned that the taste of beef could vary depending on the location of the cow and the type of grass it eats. Despite these concerns, the main challenge in producing artificial meat is its cost. The process requires costly tools like CRISPR and DNA sequencing, and it may take several years and billions of dollars for companies to engineer their way to a cost-effective solution. However, the panelists are optimistic that the technology is progressing and will eventually become feasible. They bring up the replacement of high-value proteins that are extracted from animals with recombinant systems. The cost of these proteins has been decreasing as they become more ubiquitous. The use of this technology is overturning multi-billion-dollar markets in industries such as cheesemaking and insulin production. As more proteins become cheaper to produce using recombinant systems, the markets for them will collapse in price. Examples of products that have been replaced using recombinant systems include insulin and pepsin. The conversation then shifts to a discussion about RFK Jr.'s presidential campaign and the potential for a similar situation to 1968, where an unpopular incumbent president could lead to a surprise nominee. RFK Jr. was praised for his sentiments in his speech about Ukraine and how Biden has made it a pawn in geopolitical battles, resulting in many lives being lost. He also channeled America's anti-war traditions by quoting John Quincy Adams and Martin Luther King Jr. RFK Jr. spoke about the role of the CIA during his uncle's administration, where President John F. Kennedy eventually realized that the purpose of the CIA had become to create a steady pipeline of wars to feed the military-industrial complex. The biggest applause RFK Jr. received during his speech was when he quoted JFK, saying that he wanted to take the CIA and shatter it into 1,000 pieces and scatter it to the winds. This week, it was found that 5 former CIA directors had participated in a giant hoax on the American people by claiming that Hunter Biden's story was Russian disinformation. RFK Jr. called for the security state to be questioned and said that if they are going to meddle in American politics, then they should be shattered into 1,000 pieces. RFK Jr. was also praised for his environmental activism, and he was a big critic of the way that corporate greed could lead to environmental pollution. Although he has been called an anti-vaxxer, they agree with his stance that this should never have been mandated and that the lockdowns should have been avoided. Then the current state and future prospects of Google as a company, as well as the wider context of big tech, is also brought up. One point made is that while Google has an incredible set of tools and capabilities that is years ahead of Microsoft, they have made strategic blunders such as being too open with their transformer work. The discussion then turns to the question of whether Sundar Pichai is the right person to lead Google forward, with some suggesting he is a caretaker CEO and others believing he is capable. The excerpt also notes that all of the major big tech companies are past their peak in terms of organic innovation and have instead become cash cows that engage in financial engineering to maintain their valuations. There is still room for investors to make money in these companies through financial engineering, but it is not where future growth is likely to come from. Despite their growth rates being down to single digits, these companies are still profitable machines generating a lot of earnings, and they seem to be pretty immune from what's happening in the economy right now. However, Fed Chairman Jerome Powell recently gave an interview where he mentioned that the economic outlook for the year was looking pretty uncertain and that a recession was equally likely. To combat inflation, Powell also stated that it was necessary to cool off the labor market, and even to cool off wages specifically. This statement raised concerns from the hosts, as it seemed like Powell's objective here is to hurt the wages of American people and to basically cause a recession. The hosts were also surprised that the earnings reports of these tech companies were so good given the current economic situation. They mentioned that these tech companies can cut spending and do stock buybacks as a form of financial engineering to route around the Fed, which worked incredibly well for Facebook. However, they are skeptical of how long these companies can continue to generate earnings without being impacted by the recession. The hosts suggest that Powell could have taken other steps to reduce inflation, such as cutting spending, addressing the supply side, and being more fiscally restrained. The hosts discussed the ways in which the government could affect supply chains and bring down the cost of critical inputs into the economy. One example mentioned is energy, which is a significant input into the economy. The hosts suggest that the government could have done more on energy at the beginning of this administration to keep costs low, but they believe it is now a little too late. They also mentioned that besides labor, there are other critical inputs into the economy that can be dealt with category by category. If the government makes it easier for people to produce and create supply, this will bring down inflation because inflation is the amount of money in the system divided by the amount of goods and services. Furthermore, the hosts argue that killing demand is not the solution because the fundamental problem is the flood of the economy with money. They believe that the approach of the government to tackle the issue of inflation is taking a meat cleaver to the economy, or a sledgehammer, which is the most violent way to solve the problem they previously created. Another point raised in the discussion is the issue of unemployment. The hosts suggest that people have learned to hack unemployment benefits, and there are still close to 10 million job openings. They believe that labor force participation rates remain much lower than they could be, and unlocking the supply of unused labor would alleviate labor costs, help fill the job vacancies, and increase economic productivity. They, however, think that going further to increase unemployment would be a very unpopular thing to do and hurt the wages of the American people. The hosts also discussed the outdated data collection methods used by the Fed to calculate non-farm payrolls, or CPI. However, they believe that the Fed is more likely to focus on controlling the money supply to manipulate liquidity and asset prices rather than changing these outdated methods. Chamath, Jason, Sachs, and Friedberg discuss how the world is changing to an ex-China world order where the unitary economy that used to do things cheaper, faster, and better globally is no longer the case. As a result, more things will be nearshored or onshored, which will make things more inefficient and costly, leading to higher prices and terminal inflation. This will shift the balance of power from capital to labor, and wages will go up as the only way to get people to work. However, AI will counterbalance this by being massively deflationary in the knowledge work sector. This tension will be ongoing, and it's not clear what will happen. One example of this is the legal super wizard for law firms called Harvey AI, where Sequoia led a $20 million round. This type of AI will be increasingly more deflationary, and firms will charge less and less for the knowledge work they do. Jason has been experimenting with AI tools such as OpenAI and Zapier to do automated research and outreach to LPs and potential investors. The AI tools have been able to find the names of LPs, their LinkedIn profiles, and Twitter handles. The AI tools have even been used to send DMs on Twitter and emails and building a database of every newsletter sent and adding more news stories to the newsletter in real time. Jason is amazed by the power of AI tools and is even thinking about learning to code again to do this himself. Jason discusses how ChatGPT-4 is transforming the way knowledge workers operate. He believes that currently, about 30% of what knowledge workers do can be automated with ChatGPT-4. He illustrates this by sharing his experience of using ChatGPT-4 for travel planning, where he found the Kayak and Expedia interfaces to be pretty good. He warns that if you are a knowledge worker and not using this technology and getting up to speed on it, you may be out of a job within the next 2 years. Jason compares it to using Microsoft Office 20 years ago, where people who didn't know how to use it were phased out. Jason raises the point that there could be two ways to interpret the economic impact of 30% of knowledge work being automated. Either 30% of knowledge workers will be put out of work, or every knowledge worker can get 30% more work done, making them more productive. Chamath agrees with the latter interpretation and suggests that if every worker is 30% more productive, in theory, their wages should be able to go up by up to 30%, leading to wage growth. However, he acknowledges that there may be some companies that can do with fewer employees, but there will be other companies who can hire these knowledge workers. Jason predicts that many knowledge workers may not embrace this technology and make the transition because it will require upskilling. He suggests that basic programming and coding skills may be required to take full advantage of this technology. However, Kamath disagrees and says that it is easy to use even for developers. He adds that the OpenAI APIs can make it incredibly easy to use, and there may be resistance to change due to the technology being new. The hosts bring up the potential of AI and its integration with other tools. They mention that while AI is still connecting various tools like databases and surveys, it feels like the early 2000s when the web, Ajax, and Speed were all coming together rapidly. The cost of knowledge work is expected to reduce exponentially due to remote work salaries normalizing across countries and the integration of AI tools. The host mentioned that the first organizations to adopt this technology would be consulting companies like PwC, which recently invested in AI. They also discussed the idea that the integration of AI with other tools can unlock new potential and drive progress. The hosts provide an example of a person who taught themselves to code in 2019 and built an object recognition tool that identifies calories within hours, something that would have been impossible a year ago. They believe that such low-code or no-code products can lead to new startups and ideas in the future. The All In podcast hosts predict that automation and AI will create new industries and areas of business rather than solely replace jobs and harm the economy. The speakers use the analogy of basketball and how the expansion of the game led to discovering new talents from unexpected places. Similarly, more people will be able to use code and generate new products and ideas, unleashing vast amounts of creativity. The speakers also mentioned the decline of commercial real estate due to the pandemic, with current vacancy rates at over 30% in San Francisco. The example of 350 California Street was given, a building worth $300 million and currently facing an 80% decline in bids. Despite this, some investors may still consider buying such a property as a form of land banking, which involves buying the property at a distressed price, holding onto it for a long time, and waiting for the market to recover. Unlike stocks, commercial real estate and preferred stock are assets that have leverage or debt, making it more complicated to finance such purchases. They then describe the impact of the pandemic on various asset classes in San Francisco, specifically real estate and cell phone usage. The pandemic has caused a re-rationalization of prices, leading to a 70% decrease in valuations for equity, real estate, and cryptocurrency. However, it has also led to a lot of vacant office spaces in San Francisco with a vacancy rate of more than 30%. This has resulted in landlords offering free space to attract founders to hang around, similar to what happened in New York City in the 90s. The podcast guests also discussed the possibility of San Francisco becoming the next Gotham City due to the increase in crime. A fire commissioner named Don Carmignani was beaten with a metal pipe by a gang of homeless addicts who were encamped in front of his mother's house. Additionally, there have been reports of bear spray attacks on homeless people. While some charges were dropped against the assailant who beat the fire commissioner, others believe that the use of force was excessive and unjustifiable. Check out the full podcast by clicking the link in the description below. Make sure to like, comment, and subscribe for more content like this. Thank you for listening to this podcast summary episode of The Pod Slice.